Welcome, everybody. We're so glad that you could join us this afternoon for our first of our 4 webinars that PA Treasury is hosting for National Disability Employment Awareness Month. We will hold an NDEAM webinar at 1 p.m. each Tuesday in October. Today's webinar will discuss basics of personal finance and empowerment for individuals with disabilities, including savings, checking, and PA-able. Future sessions will cover long and short-term investing, how to maintain important benefits while working, and some success stories of individuals who are working and saving. We have 2 interpreters, 2 ASL interpreters with us today. So you can look for ASL Jennifer and Jai if that would be helpful to you. I'm very pleased today to be joined by Will Hall. He's Chief Executive Officer of the Pennsylvania Assistive Technology Foundation. And next we are going to hear from our Treasurer, Stacey Garrity.
Hello, everyone. Thank you for joining us to help celebrate National Disability Employment Awareness Month and to learn more about PA-able and other personal finance tools. We administer the PA-able program here at Treasury. ABLE stands for Achieving a Better Life Experience, and that's exactly what this program does for Pennsylvanians with disabilities. PA-able is a powerful savings tool that does not impact a person's important benefits. Before ABLE programs, saving was impossible, which was a disgrace. Now, more than 11,000 PA-able opened, helping Pennsylvanians with disabilities save tax-free. And account owners have already saved more than $175 million. This is incredible. It's money that can be used to help pay for day-to-day expenses like groceries and rent, and larger expenses like assistive technology and vehicle modifications. Thanks to PA-able, so many people have an opportunity to live and build real financial security. And starting next year, millions more Americans, including 1 million veterans, will have access when expanded eligibility goes into effect. Right now, a person's disability must begin prior to the age of 26. In January, that age rises to 46. We are so excited to help spread the word about this great program improvement. Now, let's move on to the reason we're all here today. National Disability Employment Awareness Month, observed every October, is a time to recognize and support people with disabilities in the workforce. All month long, Treasury will be sharing weekly webinars covering a wide range of topics to help improve financial wellness and security. We'll talk about investments and checking account options, how to save with PA-able, options for short and long-term investing, and ways to maintain benefits while working, including details about Pennsylvania's Work Incentive Planning and Assistance Program. We'll hear from experts across the disability community, including the Pennsylvania Assistive Technology Foundation, the Allegheny County Financial Empowerment Center, Disability Rights PA, and we'll hear directly from Pennsylvanians with disabilities who will share their insight into financial empowerment. Thanks again for joining us today to help celebrate National Disability Employment Awareness Month. These webinars will help you discover great tools to help you or a loved one succeed. Please enjoy the session and visit paable.gov to see recorded sessions you may have missed.
Thank you so much, Treasurer Garrity. Will, you can go ahead with your slide.
Hey, thank you, everyone, and good afternoon. One moment, and I'll have my heads up here. Okay, my name is Will Hall, and I am the CEO of Pennsylvania Assistive Technology Foundation, and I'm going to be mostly talking today about checking and savings accounts. Before I do that, I'll do a quick introduction to who and what Pennsylvania Assistive Technology Foundation is. We are a statewide nonprofit organization based in King of Prussia, Pennsylvania. We serve the entire state of Pennsylvania, but our headquarters is in King of Prussia. The majority of the board and staff at PATF are individuals with disabilities and/or immediate family members. And I don't think I said before, PATF is the acronym we use to refer to ourselves. So that is Pennsylvania Assistive Technology Foundation, PATF. We are a community development financial institution, which means we've been certified by the United States Treasury to participate in the CDFI, Community Development Financial Institution program, and receive funding from them. It also means we've gone through a rigorous certification process. We are a consumer lender under that program, so all of our loans are for individuals. We are also Pennsylvania, which is the type of organization that exists to make financing for assistive technology more available. And assistive technology is any device or service that somebody needs to gain greater accessibility and independence in their lives. The way that we serve people with disabilities is to provide information about funding resources. So somebody who comes to us, we're able to help navigate several dozen different resources that exist for funding your assistive technology purchase. We also have 2 loan programs where we're able to lend money for the purchase of assistive technology. We also provide financial education resources and coaching, and a lot of my material today is going to come out of some of those resources, but we have resources on many other topics as well. And finally, we advocate for increased access to assistive technology. And so while we're able to help navigate a myriad of resources, and while we have some resources of our own, we know that there are gaps, and we advocate for there to be increased access. That's enough about who PATF is. Now let's talk about the topics I'm here to talk about today, which is savings and checking. First, I want to talk about why saving is so important. When you think about saving, the thing worth thinking about is that you should pay yourself first. So for a lot of people, when they think about savings, their income comes in, they pay their bills, they pay for things that they want, and if there's money left over at the end of the month, they save it. That's great. We had a little extra this month. But what so often happens is that there isn't a little bit left extra at the end of the month. And so people end up in a situation where they have very limited savings. And then when a big purchase is needed or an emergency hits, the savings aren't there in order to meet that need. And so the way to think about it is to pay yourself first. Pay yourself like you're a bill, rather than waiting to the end of the month and see what's left over. You, of course, want to make sure your bills are paid. So when we say pay yourself first, sort of a first priority, a first among many, you certainly want to make sure that your housing payments are made, your utility payments are made, other, necessary bills that you've, purchase food and transportation. But among those high priority items, you want to place yourself and your savings. The second thing about savings is that it's important to set goals. It's important to know what you're saving for. If you save money into an account and don't have a goal for that money, it's very easy to then later spend that money, right? To treat it as, well, it's available, so I can spend it on sort of an unplanned purchase or something that's not an emergency. Whereas if you set goals for your savings, where you're putting money aside every month and some of that is going toward a future purchase that you'll need to make, or that you're planning to make, or that is supposed to be available to fund an emergency to make sure that you're financially okay in case of an emergency, or if it's meant to ensure long-term stability, and so something that you can rely upon were you to ever lose your source of income or have increased expenses, or for retirement, to make sure that at a time in life when your income may decrease, you would continue to have financial resources available. Once you set goals for your savings, when you think about going to spend that money, you'll stop yourself. So rather than go into your savings account and say, I can spend this money, you'll say, oh no, that money is for this transportation need I know I'm going to have. Or no, that money is in case there's an emergency. And if I spend it, I won't have the money for in case of an emergency. So having goals and sort of putting a label to what you're doing with your savings is very important to ensure that you'll save successfully. Next, I want to talk about why banking is so important. And this is going to move us into sort of a conclusion around savings accounts, which are a great place to save money, and checking accounts, which is another great place to hold money that's more transactional. But both of those things can be held within a bank or a financial institution. So some of the reasons why banking is so important is first that financial institutions are a safe place to keep your money. I'm going to talk about several things over the next several slides that indicate why a financial institution is a safe place to save your money, and some tips to make sure that you are getting the full benefit of the safety that financial institutions can provide. So we will talk more about that in the following slides. Important to note that financial institutions must make their websites, their branches, accessible to people with disabilities. Some of those accessibility features can be accessible entrances into branch locations, accessible teller counters, easy to use ATMs. Some of the things that make a bank accessible for everyone are already built in and will be obvious when you visit a website or a branch location. That said, never hesitate to ask for an accommodation that will make banking accessible. If there is something that is making a bank inaccessible, asking for that accommodation is very important to make sure that you're able to use all of the features of a particular financial institution. So having talked about why banking is important, a next question is what bank to choose. There are a number of them out there. The right bank, and I'm going to start to change from bank to financial institution, and you'll see why in a minute. But the right financial institution is a really personal choice. Things that work for other folks may not work for you. Things that work for you or that are important to you that are necessary may not be something that's necessary for someone else. So while getting advice and having people tell you, why they do or don't like a particular financial institution that they use, investigating the features of a given financial institution is important because, again, your needs are your own, and those may range. And the person giving advice may not necessarily be taking those things into an account. So making sure that you are investigating all of the different features and options within a given financial institution will help you make a good choice on a financial institution. That said, we will talk about some things to look out for, some questions to ask and to consider. And again, if there are things that are not particularly germane to you, then they may be things that you can move past fairly quickly, but they are things you should at least think about. And this is not an exhaustive list. There may be things that are important to you that aren't on the list of things I'm going to talk about, and it's important to ask your financial institution about those. So first, let's talk about the different types of financial institutions. There are three big types that I'm going to talk about today. The first are credit unions. Credit unions are financial membership organizations. And what that means is that in order to deposit your money and use the services of a credit union, you have to become a member of the credit union. They are nonprofit organizations, and so the ownership is divided up amongst the members. You may have to pay a small one-time only fee to become a member of a credit union. I myself am a member of a credit union. It required a $5 fee upon joining. $5 is not what everybody charges, but when we say small, generally a relatively small fee. If there were a fee that you didn't consider small, I would inquire what it is that you get for that larger fee. The services and products of a credit union may include debit cards. Debit cards are cards that can be used for in-person or electronic purchases, and the funds are drawn from your account with that credit union. It's important to know if you have multiple accounts with a credit union, which account a given debit card is attached to. Credit unions may also offer credit cards. Credit cards look a lot like debit cards, but instead of being a card that pulls from your money in a given account at a credit union, credit cards are debt. And so as you pay for things with a credit card, you will get a credit card bill for all of the things that you purchased on the card with insurance included. Monthly payments need to be made on a credit card. Failure to pay can lead to negative reporting on your credit report. And holding a balance on a credit card can lead to interest being charged monthly on that balance. So looks a lot like a debit card, very different than a debit card. Credit unions may also offer checkings and savings accounts. So savings accounts are exactly what they sound like. They're intended to be places where you can save your money, long-term, short-term, for emergency purposes. They tend to offer slightly higher interest rates. So this is interest paid to you than a checking account would. Checking accounts tend to offer little to no interest on those accounts. Some are none, some are less than savings. And checking accounts are really designed to be transactional. So this is, if you're using a debit card, typically the account out of which a debit card would pull funds. And so this is the account where you save or you keep your money for things like groceries or for transportation or for sort of regular expenses, bills that need to be paid on a regular basis. The money that goes into your checking account is generally expected to not entirely, but mostly flow out and then be replenished on a regular basis, oftentimes bi-weekly or monthly, depending on how your income is received. Next, credit unions may offer money market accounts. Money market accounts are sort of an account that offers higher interest rates paid again to you for holding your money there. And so they look and feel a lot like a checking or a savings account. The difference here is that in exchange for that higher interest rate, they may require higher minimum balances in the account, and they may limit the number of transactions that can be made every month. That means the number of times you can pull money out of the money market account. Credit unions may offer mortgages, which are loans typically to buy a house or to refinance a loan on a house. Credit unions may offer home equity loans, which are loans that are secured by your home, typically used for large purchases or for renovations to a home. Credit unions may offer online banking, an ability to access your account, perform certain functions on the internet. And credit unions may offer extended service hours. So some institutions have a more typical, say, 9 to 5 sort of schedule for access to branch locations. And some will have that on some days and have extended hours on other days. And then some may have extended hours every day. It's important, if extended hours are important to you, that you ask about it and know what they are. Again, because credit unions are nonprofit organizations, they can often charge lower interest rates on their loans and offer higher interest rates on their savings and other accounts than other financial institutions. That's not to say that every credit union has the best rates in the world. There may be a bank out there that offers better rates than a given credit union. Different credit unions may offer different rates. And so if the amount that you're going to pay for loans or receive in interest is important to you, this is again something to focus on and to make comparisons between a given institution and another. Another feature of credit unions is that they often have limited geographic areas. They tend to be smaller in size than some banks, not all banks, but then some banks. And that may lead to limited options in terms of how geographically spread they are and how many branches and ATMs they have in a given geography. Again, this is not to say that every bank has more geographic spread and more branches and ATMs than every credit union. Some credit unions are relatively large, but just in general is something to make sure that if you're going to choose a given credit union, that the geography of that credit union and the number of branches and ATMs is something that works for you. Next, we're going to talk about banks. Banks are for-profit institutions. So banks are generally owned by shareholders, run by a board of directors and officers. Their services may include most of, if not all, of what is offered by credit unions. And when we say may, it's important if you need a given service or product, whether you're working with a bank or a credit union, make sure that they have it, rather than assume that because most banks or credit unions do, that this one does. Banks typically have more branches across a larger region than credit unions. Again, this is a generalization. It's important to check that. There are some banks that are small community banks. There are some credit unions that are large statewide institutions. It's important to make sure when choosing a financial institution, if the feature is important to you, that you look into it and inquire about it. But in general, this is something you would expect to find. Again, if proximity is important to you and being able to get to a branch or an ATM, it's always good to make sure that your bank is local to you. If you have a financial institution up the street and you're always going to use that branch, how spread that bank is or how many other locations they offer may not be something that is particularly important to you. If you're somebody who travels often and needs to make sure that in a given town or city, you're likely to run into a branch or an ATM, then that is something to look into as well. Lastly, I'm going to talk about online-only financial institutions. I'm not going to classify these as a bank or a credit union. In theory, they could be one or the other, but they also could be neither. And so looking into exactly what type of institution this is it an online-only bank? Is it an online-only credit union? Or is it an online-only financial institution that is neither a bank nor a credit union? Is something to know before depositing money or using the services or products of an online-only financial institution. Online only, right there in the name, do not have physical branches. So if branch access is important to you, you may not and likely will not get that from an online-only financial institution. Some have relationships with ATMs, but that is not a branch, and services at ATMs can be much more limited than what's available in a physical branch. With an online-only financial institution, you manage your accounts entirely online using your computer, tablet, or a smartphone, or a combination of those, and different ones have different access points, be it an app or the web and an internet browser in order to access your accounts. However, many of those online services are also available from traditional banks and credit unions. Traditional banks and credit unions often offer an app or a website where you can manage your accounts online. And so in comparing the benefits, it's worth looking at what a physical location-based credit union or bank offers in terms of online services to see if they're offering all of the important benefits that an online-only financial institution would offer. So that way you can make an apples-to-apples comparison. Online-only financial institutions offer limited and most often non-existent in-person help. So the idea of being able to go in and talk to somebody or make an appointment to talk to somebody is often and usually not available from an online-only financial institution. Online financial institutions may technically be banks, may technically be credit unions, but it's important to know for reasons that we'll discuss in a minute. In times when online-only financial institutions are not banks or are not credit unions, they may have a relationship with a bank or a credit union that gives you some of the benefits of a bank or a credit union. But again, knowing if they are a bank or a credit union, have a relationship and what that relationship is very important. And that's to make sure that your money and your deposits and your information are safe. Regardless of whether or not you use a bank, a credit union, or an online-only financial institution, one piece of advice that's very important, and that is not something that's unique to one individual or another. This one's important to everybody. Make sure that any place you store your money is secured by either the FDIC, which is the Federal Deposit Insurance Corporation, or the NCUSIF, which is the National Credit Union Share Insurance Fund. These insurances insure your deposits up to $250,000. That means any money that you have in an account at a institution that is insured is protected up to $250,000. So, and this is one of the biggest reasons that we can say banks are safe and credit unions are safe, is because should anything happen to that bank or credit union, if you have deposits with the credit union, up to $250,000 of those deposits are insured. And so your money is protected. I'm now going to talk about a couple of other things to consider when choosing a bank. And this is, again, not advice that anybody should, or is that universal to everyone, but they are things to consider. They're important considerations that exist when choosing a bank or credit union, whether you choose to go with any one of these features or choose to not because the features are not necessarily important to you. There's a nonprofit that works with banks and with consumer advocates to certify certain bank accounts. And that certification is called a Bank On certification. Bank On is a movement within this nonprofit that is nationwide, and the goal is to ensure that everyone has access to a safe and affordable bank or credit union account. There are over 500 account options nationwide that are Bank On certified, including almost 24 accounts in Pennsylvania. And when I say 24 accounts, I mean types of accounts, not the number that have been opened. Many, many more have been opened in Pennsylvania, but there are accounts, 24 accounts at different financial institutions that are available that meet Bank On certification requirements. Some of the key features, and I'm going to show you where you can find all of the features, but some of the key features of a Bank On certified account is low opening deposits. The amount that you have to deposit into the account in order to open it has to be $25 or less. If online banking is offered by the bank or credit union, it needs to be free, meaning you're not charged a fee for accessing online banking. If you choose to receive your monthly statements electronically, they need to be offered for free. You can't be charged a fee for an electronic statement. If you choose a paper statement, a small fee can be charged. But if you choose an electronic statement, that needs to be free with no fee charged. Monthly maintenance fees on the account, meaning the fee you pay to keep the account open, must be low. If the fee is waivable, it can be no more than $5. If it's not waivable, it can be no more than $10. Some of the key ways that a monthly maintenance fee can be waived is by setting up a direct deposit into the account, by engaging in a certain number of transactions, or by keeping a certain balance in the account. I will also say that many Bank On accounts come with no monthly maintenance fees at all. And so the amount of any monthly maintenance fee is something to inquire in, whether you're looking at a Bank On certified account or another type of account. Knowing how much it may cost to keep the account open and ways to avoid that fee are very important when opening up a bank account. The last feature I'm going to highlight is that these accounts cannot charge a non-sufficient fund or an overdraft fee. So if you try to charge money to a debit card or pull money out of the account that is more than the amount that you have in that account, what should happen is that that payment will be declined. However, if that payment is accepted and your account develops a negative balance, meaning you've spent more money than what you put into the account, you cannot be charged a fee for non-sufficient funds or for overdraft. On accounts that have non-sufficient fund and overdraft fees, these fees can escalate quickly and can make getting the account right very expensive and can result in negative reporting to a reporting agency that reports on consumer behavior with regard to bank accounts. I put a link there that shows you where you can go for more information on Bank On certified accounts. And I'm going to switch what I am sharing here for a minute just to show you a couple of key features of that website. Oh, it went back to, I'm very sorry. I'm having problems with my, there we go. Hopefully everybody can see that website. So if you follow that link, this is the website that you will get to. There's a lot of information here, including a lot of research about Bank On and the work that they've done. The two things I want to point out is that if you go to the top of the page here where it says accounts and click on that page, you will come to a page that has a map as well as a list of states down the right-hand side. On that map, you can click on Pennsylvania or choose it from the list on the right-hand side. And what you will see pop up is a list of every financial institution in the state that offers a Bank On certified account and the name of that account. So if you walk into a financial institution and say, I want to open up an account, they won't necessarily suggest the Bank On certified account. If you walk in and say, I want your Bank On certified account, it's possible that you could be working with an employee of the bank who isn't sure what account that is or hasn't been trained on which account is Bank On. However, if you walk into, and this is just a for instance, a First National Bank and say, I want the e-style account, you'll know that that account is a Bank On certified account because you've done the research and you know the name of the account at the financial institution that meets the Bank On certification standards. The other thing that I want to point out is where you can find the full standards. So below the map, where it says certified accounts, you get the full listing of all of the financial institutions across the state, across the country that offer Bank On certified accounts and their names. And above that, there's a link to the full account standards. So all of the things that I said about these accounts, you'll find on here: minimum opening deposit, $25 or less. No overdraft or not sufficient fund fees, but you'll also see the rest of the features that make a Bank On certified account meet the standards. It's important to note the core features are this top portion of the page. So this thick blue line, everything below it is a required feature of the account. There's then another thick blue line that says strongly recommended features. These features are not required to be on the account, but they're strongly recommended. So if one of the strongly recommended features is important to you, know that you need to ask about it. All of the features at the top of the page are core and they are true about every Bank On certified account. I'll switch my sharing one more time. To talk about our last page. And this is also under other things to consider. And that is, why open both a checking and a savings account? Why have both? Like we said before, checking accounts should be transactional. It's where you keep the money that will be spent relatively soon. Savings account is where you store your money that you have a plan for, either a short-term or a long-term plan. This is where I'm putting my money, not for a regular monthly bill and not for something that I know I'm going to need to purchase soon. This is where I put my money, where I'm saving for a vacation, where I'm saving for a transportation need, where I'm saving for a piece of assistive technology, where I'm saving for an emergency, should one pop up, when one pops up. Once the money goes in here, it only comes out for a very specific reason, like making one of those purchases, executing the plan when an emergency comes up. Having both types of accounts, you'll start to develop a sort of sense about how you should be treating your money. Treating your money this way really helps to take some decision making out of day-to-day life. If you've paid all of your bills and there's money left over in your checking account and you want to make an unplanned purchase, well, great. I know all of my bills are paid, and this is money that can be spent. And if I spend this money, I'll still make all of my savings goals. Similarly, if you want to make an unplanned purchase and you look at your checking account and it's, oh, I just don't have it this month, and then you think, well, I got money in my savings account, you'll sort of stop yourself and you'll say, no, that's there for an emergency. That's there because I plan on going on vacation next summer. That's there for whatever it is that you're saving for. I am now at the end of my presentation, but I want to segue to Diana to talk about two of the best options for checking and savings accounts available in Pennsylvania. Diana, I will go ahead and stop sharing.
Will, thank you so much for all that amazing information. It's super helpful. There's a couple housekeeping things that I meant to say at the beginning that I didn't, that I'm going to go ahead and say now. One is that we are recording today. So I have this little disclaimer that I'm going to read to you. Please be advised that today's meeting is being recorded for future playback and viewing. By attending or participating in this meeting, you acknowledge and consent to your statements and attendance being transcribed during the meeting. I also want to say, if you have any questions, please type them in. You can type them into the Q&A box. That's the best place to put them. And then Will and I can answer those at the end. And don't be shy, because other people might have the same question. Will, I was also thinking if you want to, you could post the link to the Bank On site and to PATF if you want to. So I'm Diana Fishlock. I'm going to be talking about ABLE. ABLE stands for Achieving a Better Life Experience, and it's a great program. I have ABLE accounts for both of my adult children who have disabilities. PA ABLE, just as an overview, is a special savings program specifically for people with disabilities. And it gives people a way to save for all kinds of expenses that might come up. It is available to people with intellectual disabilities, physical disabilities, and or psychological diagnoses. It's easy to access the money in the account. Anyone at all can contribute, can put money into the ABLE account. And it gives Pennsylvanians with disabilities a way to save for items, be more financially secure, and have more options in life, have more choices. So the first thing I want to talk about briefly is age expansion. So since ABLE began, it was available to people of any age as long as their disability began before their 26th birthday. Beginning next January, I'm very excited to say, ABLE is going to expand, and it's going to be available to people of any age whose disability began before their 46th birthday. That's going to allow us to include more veterans, more people with autoimmune diseases, certain psychological diagnoses, and just more people in general. So we're very, very pleased about that. The other factor in eligibility for an ABLE account, in addition to the age of onset, is the severity of the disability. So if an individual is eligible for supplemental security income or Social Security disability insurance, then they automatically would qualify for ABLE if their disability began before the appropriate age. But if the person doesn't qualify for one of those, then they can self-certify with a written diagnosis from a physician. I did that with my kids. That's a great way to open an account as well. So, as I mentioned, ABLE is specifically for people with disabilities. Individuals can contribute to their own accounts. Family members and friends, loved ones can contribute. and it's a great way to save for disability-related expenses. People with disabilities may have expenses that other people don't. They may have to be on special diet or get a specific kind of therapy. They may have to have specialized transportation. There's all kinds of expenses that a person with a disability might face. And traditionally, people receiving certain benefits, such as supplemental security income, could only save small amounts without losing those benefits. But with ABLE, people with disabilities can now save for all sorts of things and maintain their benefits, which is really life-changing. So funds in an ABLE account are not counted when determining eligibility for any federal programs that look, any federal benefits that look at a person's savings. Plus, PA ABLE benefits are not counted against certain Pennsylvania benefits as well. So this little chart, this little bar graph shows us without ABLE, if someone was receiving SSI, they can save $2,000. So that, see that little tiny line. But with ABLE, a person receiving SSI can save up to $100,000, which is really life-changing. People who are not receiving SSI can save more than $500,000 in a Pennsylvania ABLE account. So it's really life-changing. I'm going to talk about two different periods of time. One is how much a person can save this calendar year in 2025, and the other is over time. So this calendar year, most people can save up to $19,000, can contribute up to $19,000 in their ABLE account. So that's how much a given ABLE account can receive. Even if several people are contributing to the same ABLE account, most ABLE accounts can receive up to $19,000 this year. And then the other time period is over time, how much the ABLE account can grow to. So if I'm receiving SSI, my ABLE account over time can grow to $100,000. Or if I'm not receiving SSI, then over time, my ABLE account can grow to more than $500,000 in Pennsylvania. I want to take a minute to say many states offer ABLE, and many states allow people from other states to open accounts there. We really hope that Pennsylvanians will open a Pennsylvania ABLE because it does protect their state benefits as well as their federal, if they're a Pennsylvania resident and they open Pennsylvania ABLE. Plus, there's some nice tax benefits as well. So one of those tax benefits is that any growth in that ABLE account in Pennsylvania, so if I say I put in $100 and it grows to $110, that $10 of growth, if I'm a Pennsylvania resident and I have a Pennsylvania ABLE, I'm not going to have to pay tax on that growth, either on the state or the federal level, as long as I use it for qualified disability expenses, and I'll talk about those in a moment. Another nice tax benefit is that any Pennsylvania taxpayer who contributes to a Pennsylvania ABLE can deduct that from their state taxable income. So just using our family as an example, I could put up to $19,000 in my child's ABLE account this year, and I could deduct that from my state taxable income, even if it's for things I would be buying anyway, like sneakers or jeans. By putting that money in the ABLE account before I spend it, I get a nice tax deduction, which I really love. It's pretty easy to enroll in ABLE, to open an account. Most people go online to paable.gov and enroll there. If you feel more comfortable filling out a paper application, you can do that. You can print that out from our website, or you can call the number in the last column, the 855-529-ABLE, and ask for a paper application, which we can mail to your house. Enrolling takes about 15 minutes, and it's a lot like applying for a credit card or a bank account. You're going to answer basic demographic questions like what date you were born and where you live. You're also going to answer one question about the disability, and there's no wrong answer to that question. And you're also going to choose investments. Just to put a plug in, a week from today, we're going to be having a special NDEAM session, and we're going to be talking about investing. So you can learn more a week from now if you'd like to. So in ABLE in Pennsylvania, some of the investment options are an interest-bearing checking account that comes with a free debit card that has a notch in it, which is helpful for people with vision loss. You can use that at stores and at ATMs. There are also several investment portfolios. Those range from conservative to aggressive, and they're all a mix of stocks and bonds and cash. You can find out more about those on our website, including how they've done historically. There also is a money market option. So when you open your ABLE account, you can choose any one of those or any combination up to all of them. So as you can see, there's a lot of flexibility in there because you can pick and choose the investments that you feel comfortable with. There are also lots of ways to contribute to an ABLE account. You can write a check. You can make an electronic fund transfer. You can link your ABLE account to existing bank accounts. You can roll over a 529 college and career fund into an ABLE. There's lots of ways to contribute. We do encourage people to save their receipts from when they buy something from their ABLE account. We at Treasury don't need those receipts. It's just in case you're ever audited by the IRS. So I'm going to talk a little bit about opening and managing an account. So if the person with the disability is an adult who has the legal capacity to enter into contracts, then that person can open and manage the ABLE account for themselves. Or if they prefer, they can ask any other person of their choosing to open and manage that account for them. Somebody that they would trust a lot. If the person with the disability is younger than 18 or lacks the legal capacity to enter into a contract, then the account must be opened by another person. And that can include someone who has power of attorney, a legal guardian or conservator, a spouse, a parent, a sibling, a grandparent, or a Social Security Administration representative payee. One of my favorite things about ABLE is that it can be used for almost anything. Can be used for almost anything that helps the individual with a disability. Huge variety of things. Can be used for things like education, transportation, housing, assistive technology, personal assistance, legal fees, and more. The law spells out that it's fine to use ABLE for everyday expenses like food and clothing. You can use ABLE for short-term things like food and clothing, or for longer-term things like buying a car or buying a house. And people have used ABLE for all those things. The person managing the account gets to decide what's a qualified expense. They don't have to check in with the Treasury Department or the IRS. But again, we do encourage them to save their receipts. There are some people who can save more than that $19,000 this year, the amount that I talked about earlier. And basically, people who have a disability, who are employed and are not contributing to certain types of retirement plans during this tax year, can contribute more potentially than that $19,000. The top amount that a person could contribute would be $34,060. And you can find out more in depth about that on our website as well. Pennsylvania has been a leader with ABLE. This year, we became the first state to also offer a tax benefit for employers. So in Pennsylvania, we have tax benefit for the account owner, for any individual taxpayer who contributes, and now even for employers who match funds in their ABLE account, in their employees' ABLE accounts. We also have a group that meets now and then for professional representative payees. That's not for mom and pop like me who manage 1 or 2 ABLE accounts for their kids, but professionals whose job it is to manage another person's finances. Some professional representative payees may be managing multiple ABLE accounts, and they have issues come up that the average parent, for example, or the average account owner wouldn't have come up. If you would like to be included into that group, you can just add your name and title and email in the question box, and we can add you to that information group. So how are we on time? Okay, I'm going to stop talking now and stop sharing my screen and see if we have questions. Again, if you have a question, please don't be shy. Someone else might have the same question. Looks like Will posted his website. That's great. And it looks like we don't have any questions yet.
Diana, I see a question in between my posts. How exactly do you use a checking account digitally? And this was coming at the end of mine, so maybe for me or maybe
go
for you,
ahead.
I'm not sure
Yeah,
which, but maybe we tag team this. I can go first, or you can go first.
Yes, go ahead.
Okay. I think my answer to that question is in the ways that are available from a given online option with a checking account. And what I mean by that is some of the things that are common when you have online access to a checking account is the ability to be able to see your balance, both your posted balance and also your pending balance. So charges that haven't quite hit your account yet but are upcoming may be visible to you in your account. So you have sort of a real-time access to an idea about how much money is in your account. Some online checking platforms allow for digital bill pay. So you can set up to pay certain bills directly from your checking account without having to write a check, and those can be sent electronically. Transfers between accounts, right? So for a lot of people, their income comes into their checking account, and then when they pay themselves first and move their money over to their savings account, the ability to be able to move that money over to your savings account digitally is often available. There's often sometimes the ability as well to move money between that checking account and another financial institution, an account at another financial institution if you have more than one, or if you have a partner or a family member, and you oftentimes have to share money back and forth, either because you're splitting expenses or whatever it might be. These are some things that are common, and there may be other features available as well. But again, if any of these particular features is important to you, it's important to ask to make sure that it is available, as well as asking what might be available that you didn't think of.
With the PA ABLE checking account, you can order checks if you like to, but I know a lot of people do just use it digitally. So if I want to have an expense, I can use that ATM card to make expenses. So let's see, there are other questions. Someone asked, when are taxes paid on money in an ABLE account? So funds in an ABLE account are contributed post-tax, and any money you earn in that ABLE account are growing state and federal tax-free. if you're a Pennsylvania resident and you have a Pennsylvania ABLE, and it remains tax-free as long as you use it for a qualified disability, which is basically anything that the person with the disability would want or need, any legal expense. Someone asked, what is the process to close an ABLE account in the future should a person's situation change? So if I had a disability and there was suddenly a cure for it, I would be able to spend my funds through the rest of the tax year, through the calendar year, in order to spend my account down. So that is what happens there. Let's see, I think there might be more questions here. So someone asked, do you suggest keeping all receipts and documentation for purchases made with funds from the PA ABLE account? What kinds of documentation does the state and federal government expect from an account owner? So we do encourage people to keep receipts for purchases they make from an ABLE account. We at Treasury don't need them. It's only in case the person is audited by the IRS. So outside of the IRS, you shouldn't have to show any receipts, but we do encourage people to save those just so they, have them in case they're needed. Let's see. Someone asked, what is the maximum amount that can be in an ABLE account? Can an ABLE account receive a payment from an estate when a loved one passes? What is the max on those? So the maximum amount that can be in an ABLE account depends on what benefits you're receiving. If you are receiving SSI, then your ABLE account can grow to $100,000. If you're not receiving SSI, then your ABLE account can grow to more than $500,000 in Pennsylvania. But as far as an estate or some other large amount of money, there is a limit on how much money you can put in each year. So this calendar year in 2025, an ABLE account can receive up to $19,000. So if I received an inheritance, if it was $19,000 or less, I could put it in my ABLE account this year up to that $19,000 limit. But if it was more than that, then I would have to put some in some other place or spend it down. So someone asked, what is the process to pay rent if a landlord does not take the ABLE debit card and does not wish to, and the individual does not wish to purchase checks? So even from those, even if I didn't have the ABLE checking account, if I had those investments, I could call up the ABLE helpline and request that they send a check. So I could call and say, hey, I need you to pay $1,000 on my car. And we would cut the check and we would mail it for you. So you don't have to have the checking account if you don't want to. It's just, another tool there that's there for you if you want it. Someone asked, is there a limit for how much money from Social Security gets put into the ABLE account? No, you can put, again, up to $19,000 from Social Security into your ABLE account during this tax year. Someone asked, does having Medicaid in Pennsylvania change? Does it change? I think they're referring back to something specific, but I'm not sure what that is. So having Medicaid is one of those assets that can be protected by having funds in an ABLE account. If I'm receiving Medicaid and I have a savings threshold, maybe I'm only allowed to save, for example, $8,000 and still receive Medicaid. If I save in ABLE, the amount in my ABLE account is not counted against the total that Medicaid is counting. So I could have, say, $10,000, for example, in my ABLE account, and that doesn't count against my Medicaid. Somebody asked where you get an ABLE debit card. So you could go on our website and enroll in the ABLE program and have the checking account as one of the options that you would like. Someone else asked, is there a limit for how much money from Social Security gets put into the ABLE account? No, there's a limit overall. Most ABLE accounts can receive up to $19,000 during this calendar year. It doesn't matter where it comes from. It can come from Social Security, can come from an uncle or your job or any number of places. Someone asked about getting help from the state to pay for Medicaid premiums. I'm not really an expert in Medicaid and how it works. So that would be a question for someone at the Medicaid side. Let's see. Sorry, Will, you're not getting questions here.
No, that's okay. ABLE is a very important program, and I love all the energy. Your next question is whether you have to qualify for Social Security to qualify for ABLE.
Aren't you a full service guest there, Will, asking me the questions? So you don't have to qualify for Social Security in order to qualify for ABLE. If you do qualify for Social Security, then you automatically qualify for ABLE if your onset of your disability was by age 26. But many people have ABLE accounts, including my children, who don't receive Social Security benefits at the time that they open their ABLE account. If you're not receiving SSI or SSDI, you can still qualify for ABLE. You just need to have a written diagnosis from a physician that talks about the seriousness of your disability. So again, if anybody has questions, please don't be shy. Other people might have the same question. I do want to say too, if you think of a question later on, you can call the ABLE helpline, which I will try to share that screen again so you can see that. So if you, we're here till about 2:15 today, but if you think of a question, say next week or next month, feel free to call the ABLE helpline. It's 855-529-2253. And people are there from 8 a.m. to 5 p.m. on weekdays, and they can help answer any questions that you have. I think I heard another question come in. So someone asked about a specific benefit. So again, if you are receiving a benefit that a federal benefit that looks at your assets, that looks at your savings, ABLE, the funds in your ABLE account are protected against that total. In addition, if you're a Pennsylvania resident and you have a Pennsylvania ABLE, the funds in your Pennsylvania ABLE are not counted against state benefits that have to do with health, disability, or student financial aid. We'll give it just another minute here to see if more questions come in, but I just also want to give a big thank you to Will and to our two interpreters who have just been really wonderful. Someone asked whether there is a limit on how much money can be withdrawn from ABLE. No, I mean, you can't go below zero, but your money that's in the ABLE account, once your deposit clears, you can withdraw what you need to. There's no limit on the number of withdrawals that you can make. There's not a minimum amount that has to be in the account. It's very flexible. So we'll just wait another moment and see if anybody has any questions. But Will, you had so much great information that was really helpful.
You as well.
Thank you.
Thank you for the opportunity to be here.